President Donald Trump's decision to pause his sweeping tariff plans isn't just a political U-turn. It's an economic retreat that's shaking the very foundations of our economy. Today, we're diving deep into the aftermath, how businesses, students, and the broader economy are paying the price for this sudden change in direction. Trump's abrupt decision to halt his reciprocal tariffs, a move he seemed committed to just days earlier, comes after intense pressure from all sides. But what pushed him to change his course? A bond market catastrophe that threatened to bring the entire economy to its knees. As global markets began to plummet, the bond market, a supposed safe haven, was in freefall. This wasn't just a warning sign, it was a signal that the risks of Trump's tariff strategy were far worse than initially anticipated. Sources report that Treasury Secretary Scott Bessent personally warned the president. The bond market's collapse wasn't just bad news for investors, it spelled deep trouble for American businesses and the stability of the U.S. economy. Stock markets were hit hard. In just 1 week, investors saw trillions of dollars in value evaporate. Businesses dependent on global supply chains found themselves facing higher costs, while small companies already operating on tight margins were crushed by the uncertainty. But the consequences go far beyond just the business world. Students, too, are feeling the impact. Tuition fees are rising, trade disruptions are hindering opportunities for international exchange, and the job market for graduates is growing more uncertain. As the pressure mounted, business leaders flooded the White House phone lines. They warned Trump that his tariff policies weren't just politically divisive, they were economically devastating. Companies that rely on international trade were now facing a grim reality. Jamie Dimon, the CEO of J.P. Morgan, had some strong words on Fox Business. Jamie Dimon, clip. A recession is very likely if these tariffs continue. The damage to businesses and consumers is going to be far-reaching and long-lasting. In response to this mounting pressure, Trump's decision to pause the tariffs came after a series of wild market swings. While it was framed as a strategic move to gain leverage in future trade talks, the truth was much simpler. A desperate attempt to prevent a full-scale economic collapse. For small businesses, the effects were devastating. These owners, already struggling to navigate the complexities of international trade, found themselves facing skyrocketing costs and market unpredictability. For many, closing shop became the only viable option. Students weren't spared either. With inflation rates climbing, costs of living rising, and tuition fees soaring, the future for young Americans now seems uncertain. Rising trade tensions mean fewer job opportunities, particularly for those entering fields tied to global markets. Despite his claims of victory following a temporary stock market rally, the reality is much bleaker. A temporary tariff halt may offer some relief, but it doesn't undo the damage already inflicted on our businesses, students, and the economy as a whole. The damage is real. From tariff-induced inflation and job insecurity to a disrupted education system, the fallout from Trump's economic gamble will be felt for years. The tariff pause might have eased immediate tensions, but the long-term consequences will echo for generations. The question remains, who will truly bear the cost of these reckless economic policies? As businesses shutter and students face an uncertain future, the full impact of Trump's tariff retreat is just beginning to take shape. Subscribe and follow for more in-depth analysis of economic impacts.